In the city where I spend most of my time, Dan, the market seems to have shifted heavily in favor of FHA financing. 3 years ago, nobody would touch it. Now everybody is clamoring to get it.
What is it, like 80% FHA financing now?
It's huge.
Yeah.
I don't know the exact numbers, but it's a massive percentage, I think, whatever the numbers are.
Yeah, they've really taken over a large component of the market share.
Why is that? Why the big switch?
Well, primarily because there are no more, two reasons. One, subprime is no more. So people who have maybe like slight blemishes on their credit and can't go conventional for their financing must go FHA. And number two is that conventional financing has really become a lot more stringent in some regards in terms of qualifying people for the mortgage. So sometimes people just don't qualify in that way. The final reason, actually, there is a third reason, and it has to do with down payment. With an FHA mortgage, you only have to put down 3.5%. So if you're to get a $400,000 property as a purchase, your down payment requirement is $14,000, as opposed to conventional. If you're to put down 20%, that's $80,000. So $14,000 out of the bank account, $80,000 out of the bank account. It's very attractive, particularly when you can finance that difference of $66,000 at a rate of about 5% over 30 years. By keeping the cash in the bank, okay, you're financing someone else's money at a very low fixed rate of interest, and it doesn't really impact your monthly payment a whole lot. So let's say my payment goes up by $250. I'm happy to let that happen because I just kept $65,000 plus in my bank account. And right now, we're in a cash poor economy.
FHA financing has become attractive primarily because of the shortage of conventional financing, or for other factors?
I think it's a confluence of factors, including the shortage of conventional financing. Now, I won't say shortage, I'll just say the tighter guidelines.
Tighter guidelines.
B, the discontinuation of the more aggressive products, which were non-conventional. And then C, just the low down payment requirements for people who are looking to get into units these days.
Conventional mortgage, 20% down, $400,000. What kind of a credit score am I looking at to qualify today?
Well, you can go down to 620. However, there are these credit hits. So at the end of the day, sometimes your rate is higher going conventional, even though you're putting down a greater down payment. So it doesn't always make sense. So why not put down a little bit less, finance someone else's money, and keep your payment where you're comfortable, but you kept that cash in the bank for your own personal security. And that's kind of how I encourage people. I say, look at the required down payment, look at how much money you have in the bank, and then think what makes most sense for me in terms of financing a comfortable mortgage amount to get a payment that I'm comfortable with, while I still simultaneously keep as much cash in the bank as possible. And the reality, Joe, why is FHA popular these days, and why is it really consuming a lot of the market? The answer is because most people's situation isn't perfect. Most situations for most people are not perfect. And so there are minor blemishes, and that's okay. And FHA financing and lenders understand that, and they still give you really low rates at fixed terms with low down payments. And that's the point. It's to help Americans own homes in safe mortgage products at favorable loan terms.
Okay. We're coming up towards the November 30 expiration, probably, of the $8,000 tax credit.
Most likely, yeah.
Is it still possible to close on an FHA loan prior to that?
It is. That would be...
We're on October 1st.
Yeah.
Working back. I'm
about 60 days, yeah.
Got to move quickly though, right?
You have to move quickly. So if you're interested in one of the units at Optima, and you're looking to buy FHA, what you need to know is that the units that you'll qualify for range from within $250,000 up to over $400,000. Really, the FHA loan limit is about $410,000. You can get a unit slightly above that and finance the rest. But anywhere in that range, from just over $400,000 all the way down to $250,000. Let's say you're interested in a $400,000 unit. What would you have to do? Well, you'd have to put down $14,000. You'd have no closing costs. You'd have a 30-year fixed rate at 5%, and I can give you the payment if you call. Now, the question that you asked, Joe, was, can I close within the time frame?
That 5% could change tomorrow, though, correct?
It could, but rates have actually been very stable. They've been very stable. In the past week, they've actually steadily gone down slightly. So they've really been hovering around 5%. And let's say, worst case scenario, they were to increase by a quarter. I mean, your payment isn't going to change a whole lot, but I'd be willing to guess they're going to continue there for the next probably month at least, if not longer. They're doing everything they can to keep things pretty secure right now and stable and steady. But the point that I'm trying to make, though, is that for $14,000 down, you can get into a unit with a comfortable payment for you, and you can close within that 60-day window and take advantage of that $8,000 tax credit. You're going to want to move, though, within the next, I'd say, 2 weeks most, because you don't want to risk it and say I'm going to take less than 45 days. An FHA loan can close within 30 days. However, Joe, I personally
can, but you can't.
It can. Well, I'm conservative, so I would put at least a week buffer in there, if not a 2-week buffer. When it comes to, part of the reason why I'm making this deal work for myself is because I know I'm going to get that $8,000.